One of the things that I see, Joe, is that payments are changing, definitely. I see them personally changing more rapidly when it comes to consumers, because consumers always want the best. They want the
Mhm.
newest, they want the best, they want the shinies, they want everything new and shiny. And for businesses, they want a lot of the shiny things, but their goal is to make money. And not only is their goal to make money, it's to make money doing what they do.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hi, and welcome to Wrestling Payments. Today I have a guest. The guest is Jaime Berg. Jaime, I know you from a long time ago, but can you introduce your title and a little bit of the journey and where you are now?
Sure. Thanks, Joe. Yeah, we do know each other from a really long time ago. I actually started my career over 25 years ago. I don't want to really age myself, but started as a treasury management or cash management trainee at KeyBank right out of college. And that was kind of like unheard of back then. Everybody was going to be a commercial lender, but then there was me. And I actually think one of the guys in my program did operations as a management trainee. So it was a little uncommon. So started there and, probably got to know you years ago through obviously NEACH. Was there at KeyBank for about 9 years, journeyed over to my family business. So here I went from the backside of, the banking world to the front end of being the customer, which was really, really interesting. And then unfortunately or fortunately, the family business was sold and I went back into working for a fintech. I went to work for a company out of Maine. It was called Fisk. They did backroom processing for banks and also did lockbox processing. I was there for a little bit and then one of my clients recruited me. I was at Bangor Savings for about 9 years and actually managed product sales and support for treasury management, and decided it was time for a career change. And I ended up going to work for ACH Alert. They were actually one of my vendors that I had selected years ago that I got to know through my friends at Bank of Oklahoma and TCF. So, lots of changes over the years. I've sort of been privileged, I feel, because I've seen, you know, large corporate banking. Been actually a customer of a bank, and now I'm in, fintech. So I've really seen, I feel like, a lot of different things over the years. And people do laugh because my degree's in accounting, and they were like, "You were an accounting major? You like to talk too much." So here's where I am. ACH Alert was actually acquired by Alkami about 4 years ago, and here I am at Alkami. And today I am the director of ACH Alerts, and also for the sales team and for account management. So excited to be here today talking to you about payments.
So it's really interesting. I start off with a really base script,
Mhm.
but then just that opening gave me so many questions to ask. So I'm going to start at the closest to the subject.
Mhm.
So ACH Alert, we here at NEACH, we're familiar with ACH Alert because
Mhm.
they were a vendor in our business. They came up with a really good product that we're going to talk about. But how would you describe Alchemy? Are they more than a fintech? I always thought of them as internet. Am I wrong?
Yeah, so Alkami as a company first started offering digital banking in the credit union space. And then, of course, they've expanded over the years and offer digital banking to banks all across the country. And they have made several acquisitions over probably the last 4 or 5 years. We were one of the first acquisitions, that being ACH Alert. They also purchased a company that did online account opening, and then the last acquisition was a company called Segment that does data and marketing analytics.
Hmm.
So, really interesting journey, and really all things that fit with digital banking and help banks really and credit unions expand and make them able to buy most of their products from one vendor if they choose.
That's really interesting. I don't know them really, but it sounds like they were making the right moves. The data, that's wasn't big maybe 10 years ago. It's
Mhm.
it's everywhere now as far as mining and
Hmm.
AI and what you need for data. So if I was going to invest, which I'm not an investor, please don't listen to investment advice. It sounds like they're making the right moves in digital banking. I want to take a little side trip for a second. So one of the things NEACH is doing here is NEACH U. It's a new approach to things. We're really organized around topics, so compliance or risk or treasury. And we rather than, what we've done in the past is offer, courses people were asking for. So it was kind of like a la carte, right? Hey,
Right.
someone asked for this course, let's do it. Yay. But now we've gone back to basics and said, what's the whole program look like?
Hmm.
And one of our uh, strategies, ideas is to get into colleges. And I know there's leadership banking programs that collaborate with college, but you mentioned you went into a management program for
Hmm.
treasury, and you had a friend, a coworker that went into operations.
Right.
Any thoughts around that strategy as far as I have a dream of introducing payments to the college community. Because when you look at their courses, it's all, risk management, insurance, a lot of balance sheet stuff, a lot of asset stuff. Any thoughts
Right.
on that?
Yeah, no, I mean, and I think we're seeing a lot about cybersecurity, but I think one of the things that, Joe, I see a lot of is that lack of the ability to hire people with any banking operations background, the ability to hire anyone who's got treasury management experience or education. It's really, really tricky. One of the things that I always say is that it's easier to hire a banker or a teller or someone with an accounting background or a finance background to teach them treasury because they've got a baseline. They need that foundation. And then we're going to, it's building blocks on top. But, same thing with operations is that people don't know all the regulations, how checks flow, how ACHs flow, how does Zelle work? How does that work in a bank environment? And so I do think, management trainee programs at financial institutions are really important and not just to turn out lenders, because at the end of the day, you only have, you know, so many people doing treasury management out in, our environment. And what you're seeing a lot of is people just moving from bank to bank because it's really hard to hire experienced people. And I think it's the same in operations. You see a lot of operations, management positions because they're just not getting trained somewhere else and they're growing up in the industry. And now people are retiring and it's really tricky to find, those replacements. So I do think getting into a college environment is really important and to get into, banks to start considering if they haven't started their management trainee programs again, start them again, but just don't try to turn out credit analysts and lenders because you might have 40 of those, but you probably only have one VP of operations. And you've got to keep that experience within the bank and continue to grow it because if not, you're going to be in a hard spot. And I think there are financial institutions in a hard spot trying to find people to fill those roles.
Excellent. I appreciate that. That was good feedback. One more question before we get into our real topic today. How did you, oh, well, we guess we know. How did you get into that management program? I don't find people who say, I want to be a banker when I grow up. How did you enter that program?
So it's kind of a funny story. I graduated from the University of Hartford with a BA in accounting, and I started applying for jobs. And my first job offer, and if my father were alive today, he'd be laughing, was from the IRS. And it was to work at the IRS in Stamford, Connecticut, and they were going to pay me $16,500. And my father was like, that's awesome, but you cannot live on $16,500 in Stamford, Connecticut. Like, that's just not going to happen. If that's the job you want, we'll try to help you, but you may want to really think about looking at other positions. Like, don't just take this job. So, and this is the whole truth is that it helps to know people. And my father knew people at KeyBank. I got an interview in their management trainee program. And here we are. And I always say to people, use your resources. It's not going to get you the job, but it's going to help you get to that top of that pile to get the interview. And then you're on your own. And that's what's really important. So that's how I got in the program.
Excellent. So you didn't want to be a banker when you grew up. Go ahead. We got it. We got it.
I did not want to be a banker when I grew up. I don't know if I knew what I wanted to be, but I knew that I was not going to work at the IRS for $16,500 in Stamford,
And
Connecticut.
so the other part of that story is, why are you still in banking or fintech? I'll end it
It's
there.
fun. I think it's fun. I mean, I think people think that I'm crazy, but when you are in fintech or you're in payments or you're in treasury management, and everyone who's in treasury management who listens to this, every day is different. You never know what you're going to get. You never know what you're going to be dealing with. And it makes it interesting. There's so many things that have been evolving and changing. A lot of it has to do with, fraud and losses and risk. And so it keeps us on our toes. It gives us a lot of variety. And so I've really just enjoyed it over the years. And it's a space that I'm very comfortable in. And I like to educate people, because at the end of the day, particularly when it comes to fraud, I have a huge passion about fraud. Long before I came to ACH Alerts and to Alkami, I hate to see the fraudsters win. I know it's their job and they're really good at it. But at the end of the day, the banks don't win, the credit unions don't win, and the customers don't win. It's only the fraudsters. And those are not the people we want to win. And I just, they're criminals. And I don't want the criminals to win.
I so agree with you. I didn't mean to be in payments. I love it. I love payments. I love everything you talked about. And it's with the fraudsters, it's not getting better. It's actually getting worse. So it's a fight.
Yeah.
Okay.
Agreed.
So podcast was intended to be about small businesses and Small Business Month and all of that business. I think we may miss Small Business Month actually at this point from a recording schedule. But I did think that ACH Alert was really an interesting story. I've been in banking, or really the association, for a really long time, and you see lots of vendors, right? And over time, the vendors offer big products, and it's a solution that makes sense. I'm trying to give off a feeling of kind of plodding along. But then along comes a star, right? And I think ACH Alert was a star. Can you talk a little bit about how ACH Alert came to be and what you do there? Because it for me, it was even before we were using the word fintech, right? And
Right.
that's come along kind of after it, but they were a star when they came out. Can you talk about that?
Sure. So the company was founded by Debbie Peace and her husband, David. And Debbie was just an innovator. And she saw that there was a hole in the market. She was an AAP, very active, and that there was something called blocks and there was something called filters. And there was not really an automated product out in the marketplace to really help financial institutions eliminate, fraudulent transactions from being posted or being transacted on an account that had an ease of use from a customer experience standpoint. When they first started building out the product, it was supposed to be consumer-based. But then things changed pretty rapidly and it went right to business. One of Debbie's really, close partners that she had worked with over the years, really said, hey, we need a solution. And so they started building it. And so that's how they ended up with an ACH Positive Pay solution. And it was really designed so that it was a seamless back end and a front end solution. I think we're all really familiar with putting blocks, putting filters on the core, and then having to communicate that information to the customer somehow. Well, again, some financial institutions have figured out how to use a front end solution with their back end core, but that means they have to communicate. Or in my case, the financial institution that I came from, everything was manual. It was all on the core. But if something came in that wasn't on the core, we'd have to reach out to the customer, get an answer back, then either pay it, return it, and add it possibly to the core for future transactions. So it was really just to design a seamless solution, kind of like a check positive pay solution. And so that's how it started. The funny part of the story is Debbie never looked at check positive pay to begin with, because she really felt that there wasn't the need in the market because there were solutions out there. And then some of her biggest customers kept saying, we really need a better check positive pay solution. We love your ACH positive pay solution. It's a back end and a front end. We're not relying on multiple solutions. And we need something better than what's being offered in the market. And so she and a couple teams went to a couple different financial institutions and started building out our check positive pay solution. So now that's actually probably our biggest growing solution because, as we all know, check fraud is it's continued to grow and it's not going away. And that's what we're actually finding most financial institutions are onboarding. I'm also finding from being a director of sales that there are a lot of financial institutions out there that have not offered ACH positive pay and have not offered check positive pay in the past. It's somewhat shocking coming from my background, but I bet you 60% of the financial institutions we are onboarding or even more never had either of these solutions.
I'm channeling my friend and fellow podcaster, Kevin Olson, and I can hear him almost in my head saying, okay, there's a lot to unpack there. So can we back up a step? So for our audience, let's assume they know what we're talking about, but positive pay is sort of here's a list of everyone I intended to pay. You provide that to the financial institution, and they can watch and stop anything that's not on that list. And ACH, if I can remember at the time, that was a new thing, right? I mean, it wasn't common. It's kind of common today. There is, you can always go to check positive pay, and if people sign up, they can provide either a list of here's the check number and the amount, or even here's the check number, who I intended to pay, and the amount. And again, the bank can say, that's not the right amount. That's not the person you intended to pay. But this was new at the time when ACH Alert came up.
Oh,
Okay,
absolutely.
and then you said another thing that people you almost say it because we know it, we talk it all the time. When I thought of that plodding along, how would you describe the core? Because when I think of the core, I think of this monster program, if you will, computer that does everything you need it to do in banking, depending on how you implement or who you're using. But it's set. This is how it works. And if you want it to work in a different way, it takes a lot of effort, maybe a lot of money. And even though you may be using the core, there are a lot of other institutions probably using that core. And sometimes if you say, I want this solution, they're not going to get it, and they're not going to get it, and they're not going to get it until they pay to implement it. I guess it's the idea that you said you used to have to do this manually. Anything you can comment on that?
Yeah, so I think that when I refer to it, you used to have to do it manually. A lot of, and Joe, I know you know a lot about this. Like you could put a stop payment on an ACH, right? So when you think about a core, it's really the system of record at the bank for their checking and savings accounts. So that's where everything is sort of housed. It's what's going to produce the statements that people are getting, the e-statements, the paper statements that they're still getting them. And what would happen is they would start putting a stop payment, kind of like thinking it's a block, so that if that vendor came back in, it would stop it. And as you and I know, based on the NEACH rules, businesses have to renew a stop payment on an account every 6 months, ACH or check. And then some of the core systems would allow you to say, oh, I actually want to allow certain vendors to be able to debit me. And maybe their core even allowed a limit. And it was all based on this thing called the company ID. And so what would happen is if that customer had stops or blocks or filters, transaction comes in that's not on that stop list, it's not on that approved filter list, what am I going to do with it? Well, now operations has to say, this one's not allowed. What am I going to do with it? And they've got to reach out either to the customer or to the treasury department to reach out to the customer. And then the customer responds back, email, fax, something probably not very secure, and says, oh, go ahead and pay it. Now you really need to document it and let your operations area know to post it. And then, of course, they might say, oh, but that's a new vendor. I want to add it to the approval list going forward. So then they have to fill out a form. So if you think about that whole manual process, and not only the manual process, the room for human error and the resources it's taking, it's a little on the crazy side. There are systems out there that might have had their digital banking that the customer could see everything and click return, click pay, but it still had to get into the core. And a lot of the times that was manual. And what Debbie did is she designed a solution that, guess what? You didn't need the core. You didn't need the digital banking. You just needed the solution that she designed with an SSO. And we could send back files to the bank to say, return these transactions. It really automated the process and actually put the customer in control. And that's what we all want, is the customer to be in control of their transactions. Let them make the decisions because they know best. And it, from a resource standpoint, from a risk standpoint, a liability standpoint, it's better for everybody. Customers love it. And I'm not talking about the financial institutions. They love it, but their customers do too, because nobody wants to talk. Nobody wants to go back and forth. You want one point of action and to be done and move on with your day, because they have other things to do. They don't want to go back and forth with the bank.
100%. Sean, CEO of NEACH, recently said, let's find, what are the problems in payments that are happening. In his first market intelligence survey, it's going on right now, is on positive pay. And that's in combination with the idea, if you look at the last, I think, if you look at the last year, maybe year and a half, maybe 2 years, check fraud, check all the people sticking up mailmen, stealing their mail key, and now checks are being stolen out of the mailboxes because the bad guys have the keys. They're washing them, and I don't know the technical, but they're changing that check to be a fraudulent check. It's getting cashed. But the resistance to positive pay, we're hearing, anecdotally from the industry, is it's too hard. The idea that we do it at NEACH. So I know it's, as long as you know the steps, it's not hard. But for someone who's busy trying to make money, trying to build a business, I can understand that. Going in, making sure you hit the deadline on taking care of that. We're doing a survey to see what's working, what's not, what are the obstacles. It's really interesting and really timely. And ACH Alert is, the positive pay product is how long? How old? It's got to be 10?
The ACH solution, it came out in the market in 2010. So it's 14 years old?
14, yeah.
Yeah, and the check is probably 7 or 8 years old at least. So they've been around. And, to your point, people think it's hard until they actually start doing it. Because one thing I assure, financial institutions and customers when I was in banking is it's a lot harder when you actually have fraud.
Mm-hmm.
Because depending on your options, if you've got to close out that account, it's a nightmare for a business. It's not what they want to do. And I think that when you think about check positive pay, customers are like, well, I don't want to have to load a file. Well, you only have to load a file when you do a check run. So most businesses are not doing check runs every day. And you only have to go and manage the exceptions when you have exceptions. So if you're loading the file, you have a good, your bank has a good positive pay solution, then guess what? You're probably not going to have to go in and manage too many exceptions. And hopefully those are the exceptions you want to manage because they are altered or fraudulent. And it's really the same thing with ACH, positive pay. When you think about it, the first 30 to 60 days, you're in the solution a lot because you're building your acceptable vendor list based on the transactions coming in. And then after that, it's going to be the ones that are the exceptions. Someone went over a dollar limit or you've got a new vendor. Mm-hmm. It's really not that time consuming. It takes a couple minutes. And versus if you have fraud and your bank says close out your account, not only do you have to deal with, getting new check stock, it's notifying every single vendor who's debiting you, crediting you, doing reprogramming, maybe even on your credit card processing. And what about your wires? Mm-hmm. All those wires that are coming in, it's a lot of work. Everybody is really concerned about when I get something to change banking information, how do I validate it? And I want to make sure that it's not going to go to a fraudster. So it even makes it harder for you as the business to get everything changed with your vendors because they're making sure that it's really should be changed and that you are who you say you are and the information is correct. So it's kind of a headache. So if you have these solutions in place, you're going to prevent fraud from happening. And, it's like insurance, you get
Yeah.
insurance. So if you have a problem, you're protected.
Let me ask you a question. When you talk about your product with clients, are you talking to the companies at all? Or is it really the
No,
banks?
we're really just talking to the financial institutions, basically the banks. I have a visitor. Isn't that
Yes.
nice?
It's awesome. What's the name of the visitor?
The visitor's name is Bailey.
Oh,
Bailey
good name.
Bailey is truly a visitor. He's visiting for the week.
He had the look of found you.
Here you are.
Um,
Where
for
you
the
are.
listeners, Bailey is a dog.
Bailey's a dog.
He's perking up every time the
You
name is
say his
said.
name. Yeah. So it's a lot of work to change a bank account.
So I did have a question on that. So this is a theory. This is I set thoughts on here's how I think about something, and please disagree or agree to help me fix my theory. Businesses think they're consumers. So when they hear that a fraudulent check was cashed, they go, oh, okay, that was just a mistake. Can you give me my money back?
Right.
And we didn't touch it in the back, but when you were talking about ACH Positive Pay and companies, there are different laws
Oh,
that
yeah.
apply. Am I wrong in thinking they think they're consumers and they think it's all set? Give me my money back.
Yeah. No, you're absolutely right. They are consumers, but the way they're a business, like they are representing a business, and business rules are so different. And one of the things I try to remind banks, it's your responsibility to make sure that you're educating your customers, that they understand what protections they have, what's available to them, and they're not a consumer. The protection rules are so different. And that's one of the other things that make these solutions like check and ACH Positive Pay so attractive, because it's a prevention. It's that insurance policy, like I said. So you're not wrong at all. A lot of them don't understand. And I think part of it is on the financial institution not necessarily thinking that they don't understand. So they really need to understand that their customers don't. They need to make sure they're educating them. And, Joe, I spent a lot of time, with our customers when I was in banking saying, when you're doing ACH origination, make sure you're using the right TRAN code. Because if you send out a PPD debit to a business, they can return that for up to 60 days.
Yeah.
And they don't understand that. And no matter how many times you tell them, until it hits, it comes back, then they're like, well, what do you mean? I'm like, well, you use PPD for your payroll, but you don't use PPD when you're pulling money from a vendor.
Yeah.
It's just really important to make sure that you're educating your customers so they understand what protections they do and don't have, more importantly.
Yeah, no, that's really true. And, when we teach, we give an example of credit risk. And say, for instance, the company gives you a payroll file and then you send it out. And then after you send it out, the next day, the company goes bankrupt. Now, in reality, there was a period of time, maybe from 2008 to 2021, where no one was going bankrupt. You didn't hear the bankruptcy stuff anymore. You didn't hear the Chapter 11s and the Chapter 21s. When the interest rate changes and times change and economies change, people do go bankrupt. People do go out of business. And that's the case when, I could easily imagine, hey, we need money. Is there anything we can do? If you have a bunch of webs sitting in your web debit sitting in your corporate account, those are going back, and they go 60 days back. And everyone thinks I think this is sad, but everyone thinks people think the banks are bad guys. But these are the rules. So if, for instance, you mistakenly sent out a bunch of webs and some people wanted to get their money back because they were cash strapped, they could return those. When they go to their institution and say, here, this is a web, I want to return it, the institution has to say, okay. There's no, really? Is that right? It's okay.
It's okay.
So those are some of the challenges.
Totally agree. I mean, it's it's just so important for them to understand the rules. And again, to your point, they might understand the rules too well and use them to their advantage when
Mhm.
they shouldn't be. But I think the other point, Joe, is when there was a new rule that came out, or I shouldn't even say a rule. I think it was a recommendation about putting some additional language on the WASD,
Mhm.
which basically was like, you're going to go to jail for life and pay up to $1 million if, when you're completing this WASD, it's not actually accurate. And I think that hopefully will help prevent situations like you're describing. And that's what we actually did to our WASD. We updated that recommendation. We put that recommendation on there because we wanted customers of financial institutions to understand that this is a legal document.
Mhm.
And you can't just return money to return it. It's actually got to be for a specific reason that is allowed based on the NEACH rules.
100% true. And again, bank's not the bad guy. It's the
Right?
law.
No,
That's the law.
exactly.
Yeah. Excellent. So I want to wrap up the episode. I think we had great conversation. Anything we want to bring back and kind of finish out? It was, for me, I wanted you as a guest because ACH Alert was one of the rising stars for me. They were, I went to the payments conference
Mhm.
lots of years, not every year, but lots of
Mhm.
years. And walking around, vendor was selling what they were selling last year. Vendor was selling what they were selling last year. Oh, they have a new feature. Great. ACH Alert, the first time I remember going to that booth, there was an audience. There were people sitting through the presentations. It was something. It was remarkable.
Mhm.
So that's why I wanted to have ACH Alert on as for me, one of the first rising stars. I'm sure other people in the industry, the ATM was the rising star.
Right.
But for me, the ACH Alert was the first rising star for me. Anything, the floor is yours. Anything you want to say?
No, I think that to your point, it was a rising star and it continues to be a star. Obviously, through the acquisition by Alkami, they saw us as a star. We continue to see, financial institutions looking for solutions. And here we are. We're really here to help financial institutions protect themselves and their customers. And at the same time, making sure that as we're marketing our products to them, that we're educating them because we want them to see the value. We want them to understand the benefits to the products so they actually know how to market them to their customers. Because I do think that's one of the biggest things in treasury, as you know, Joe, like these aren't products like Zelle that I can just go on my online banking app and get. These are usually products that actually take someone out to be out in the market, marketing these for the bank, whether it's the treasury department, your business banking group, cash management, to the customer so they know you have these incredible services to help protect them and protect the financial institution. And it's not something that's just automatic at this point in time. So it continues to be a star. I hope that we will continue to be a star for all the years to come because one of the things that I see, Joe, is that payments are changing, definitely. I see them personally changing more rapidly when it comes to consumers, right? Because consumers always want the best that's out there. They want the
Mhm.
newest, they want the best, they want this shiny quarter. They want everything new and shiny. And for businesses, they want a lot of the shiny things, but their goal is to make money. And not only is their goal to make money, it's to make money doing what they do. So if they're selling widgets, they're going to continue to invest in software or manufacturing equipment to help make their widgets more effective, more efficient, quicker, get them to market quicker. They're not spending their money on their accounting software as quickly because it's not what's making them money. So that's why I think that we will continue to see changes in the payment front, but businesses always seem to be behind the adoption because of where they're spending their resources. And I think that's okay. And I think that's why we continue to see check fraud. It's why we continue to see ACH fraud. And for that, we'll probably continue to be the star. And as long as we're the star because we're stopping fraudsters, I'm thrilled. That's the goal, is to stop the fraudsters from winning, help businesses continue to grow, and financial institutions to help grow and reduce losses.
Excellent. The name of this podcast is Wrestling Payments. I like to try to include a wrestling thing in it, but it's not an obligation. I do think, and here's my opportunity, I do think that fighting check fraud and payments fraud right now is a battle. It's happening. You may not see it because it's happening in the banks and it's happening in individual businesses. But check fraud, the number of checks, you would think. So here's the stats. Checks at some point started declining because things were getting more electronic.
Right.
So you think that the amount of check fraud would decline as well. It's not. So whether companies need it or know they need it, they need it. And, this is not a plug for you, but it is a plug for Positive Pay. It's such an easy thing. I know it's got steps to it. I enter the check numbers because we have a little tiny check run. Uploading that file, it's just a different series of steps. It is a battle. You said something else too that I wanted to comment on.
I don't remember, Joe, but the big line always is, and it's so true. It's not it's not if a business is going to have fraud, it's when. 80% of businesses, the last study that just came out, either had fraud or had attempted fraud. So that's what we just need to remember. It's not if it's going to happen, it's when, and you just want to be protected. That's what it really comes down to.
I think that will be the last words. Thank you very much for joining me. This was really interesting. I actually enjoy this podcasting thing because it's, when you're coming up to it, it's like, oh, what are we going to say? I don't know what we're going to talk about. And then all of a sudden, we have this great conversation.
Right.
So I appreciate your time.
Thank you so much, Joe.
Thank you.
Fun.
Thanks.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.